Hi, this is Fuad Abasov, a broker with Right at Home Realty, and this is your monthly real estate statistics. For the past couple of years, the Canadian housing market has been that perfect kind of emotional money puzzle that will drive almost anyone bonkers. Anyone involved in real estate or those who are just thinking of buying or selling, watch the scalding hot housing market with a mix of alarm or horror for those already deep in the process, and caution for economists everywhere. Historically low mortgage rates have made a drastic turn upward, deterring potential buyers while putting an end to a flood of refinancings. Throw in inflation and war, and we're looking at a far different landscape. I was asked similar questions many times on a daily basis. Is real estate too hot to buy into? On the other hand, is it too hot not to buy into? What if recent interest rate hikes do more than just slow things down and the whole market collapses? It's a lot to think through, maybe so much that you don't want to try to think it through at all. Let's start by quantifying the craziness. In 2019, the average price in Canada was $530,000, increasing by 50% to slightly more than $790,000 this past February, which is considered the peak of the market. Prices went down 13% from the prior months, thanks mostly to the interest rate bumps and resulting higher mortgage rates. Even with this drop, average home prices remained 30% above average prices at the end of 2019. This should answer anyone's question whether real estate is a good investment. Housing shortage isn't helping matters for anyone. Since the beginning of COVID, supply chain problems, increases in labor costs, and taxes have led to lingering backlogs of unfinished homes for builders, who might decide to materially pull back on construction. The ideal scenario with interest rate hikes might be enough to ease inflation pressures, but the biggest question stands: will house prices crash in 2022? In my own opinion, and many others who deal with real estate on a street level 24/7, it is unlikely that house prices will crash, but they will definitely fall. As I have mentioned earlier, house prices have increased by almost 50% over the past 2 years, but the rising cost of living and rising interest rates are likely to put the brakes on this runaway train. Now, let's take a look at detached home sales in Toronto and surrounding areas. The amount of sold properties and home prices continue to decline almost everywhere. Toronto was not an exception. In May, the average selling price of a detached home in Toronto was $1.91 million, a $50,000 decline from previous months. However, compared to May of last year, the average selling price is still up by 11.5%. In the city of Vaughan, sold properties were down by 56%. An average selling price of a detached home was $1.79 million in May, compared to $1.93 million in April, a $140,000 drop. However, average selling price compared to May of last year is still up by 8%. In Richmond Hill, the amount of sold properties went down to 46%. The average selling price of a detached home in May was $1.92 million, a $110,000 drop from April, when the home price was $2.03 million. We're still up compared to last May by 6.27%. In Mississauga, an average selling price of a detached home in May was $1.65 million, $130,000 decrease from previous months when an average selling price was $1.78 million. Average selling price compared to May of last year is still up by 5.86%. In Markham, an average selling price of a detached home was $1.77 million in May, a $170,000 decrease compared to previous months. In other words, if you would have bought a house last year in Markham around the same time, by now it wiped out most of your equity. In Newmarket, although average selling price was down by $40,000 compared to previous months and was sitting at $1.35 million in May, the real estate in Newmarket remains strong. It's still up by 15% compared to May of last year. In Aurora, the average selling price of a detached home was down by $80,000 compared to April. However, an average selling price compared to May of last year is still up by 18.6%. In Innisfil, average selling price of detached homes went down almost $140,000 compared to the beginning of the year, but the drop has slowed down. The average selling price of detached home in May was $1.03 million, only $10,000 difference compared to previous months. We're still up by 10.3% compared to May of last year. In King City, compared to last year, we had 4 times less properties sold in May, and average selling price of those properties was $2.66 million, an 11% decrease from May of last year. Bradford is holding strong. Average selling price of detached home in May was $1.33 million. Compared to May of last year, we're still up by 20.5%. In Milton, the average selling price of detached home went down by $140,000 compared to the beginning of this year and was sitting at $1.46 million in months of May. However, the prices are still up by 9% compared to May of last year. Stoufville is not doing so good. Sold properties was down by 42%, the amount of new listings was down by 22%. Average selling price was down by 7% compared to May of last year and was sitting at $1.5 million. In Barrie, the amount of sold properties was down by 48%. Average selling price dropped down to just below $1 million and was sitting at $947,000. However, average selling price is still up by 14% compared to May of last year. Just in case you have already decided that maybe home ownership isn't the right move for you right now, don't expect the rental market to ease your pain too much. Would-be buyers are turning to rentals, and that is pushing demand and rents much higher. If you'd like to receive your own personalized sales report about home sales on your street, please email me at sold@fuadhomes.com or call me at 647-801-3401. Thanks for watching and see you next month.